I'm joined here in the studio by Benjamin Reed-Hurwitz, Head of Research Development for EMEA and North America at ISS Market Intelligence. He's also lead author of the Pridham Report, and he's going to walk us through what the data's telling us as 2025 wraps up and how asset managers can get ahead of the curve going into 2026. Well, Ben, what were the key investment fund trends that you saw in 2025, and which of those do you think will continue into 2026?
So I think the most important trend we're always watching is net sales into the business, and particularly net sales into investment funds between money market and long-term funds. What we've seen in 2025 is a very muted environment. There remain many risks that investors are focused on, and it seems to have created sort of a fragile and hesitant investor. So net sales is very important, so we're going to be watching that, because that's sort of the flow of money. So if we think about a river, that's the flow. The next trend we're watching is really developments in the intermediary landscape. So talking about IFAs and wealth managers and advisors. Because if the money coming from clients is sort of the flow of the river, they're the next ones in the value chain who can sort of direct where that money goes. So the way they're building their practices and how those dynamics are changing is also something we're watching very closely. That also funnels through to essentially watching an evolution in portfolio construction in real time. And what I mean by that is through the great platform data that ISS-MI has, we can see advisor flows and essentially where new money's going and where existing assets are and where the dislocation is. And then finally, we're watching sort of how asset managers respond to that. And really the big thing coming out of all of this is blend has become the trend. And looking at how active and passive solutions are being fit together to sort of build the portfolio of tomorrow.
And let's move on from that to what's going on in the product space. So again, 2026, where's that story heading?
Yeah, so the traditional line for some time has sort of been thinking of active versus passive. But we're sort of well beyond that now. As I've spoken about, the portfolio of today often blends those two. And in doing so, what we've seen is allocators have become very discerning in sort of which funds they pick and sort of the purpose behind it. So again, if we look at passive, that's really being used for the benchmark exposure. We see costs being particularly important, but it's really about tracking error. And then it's really about the benchmarks people want to be exposed to. And I'd say another development in the portfolio, which has a key impact on product, is the fact that the portfolio is now rooted in the global, okay? And this has had much of the impact of when we talk about flows into UK equity. Much of this is because the portfolio used to be rooted much more from a UK perspective. Now, and not just in the UK, but across the globe, portfolios are being built to globe out. So we're seeing different allocations in both fixed income and equity. But then that brings us to active. So what's active bringing to the portfolio? Well, in a big way, active is there to still do what it sort of says, to bring that alpha. But there's been a much more discerning eye to alpha. Obviously, there's still a great demand for alpha-generating products, those that can produce it consistently, but asset managers need a really sort of crisp story. But kind of talking about the product trend is again, this transition. So I already said we're transitioning to a global portfolio from one rooted a bit more in the UK. But again, we're transitioning to a blended portfolio from a portfolio that used to be tilted more towards active. So when we see the flows, and we often see passive funds having net sales, active having net outflows, what we're really seeing is the transition. But that transition portfolio is often blending the two, and managers are essentially finding their opportunity in the blend. And it's really opening up new avenues for new products as well, including items like enhanced index or sort of systematic active. So again, we're kind of seeing a renaissance in portfolio construction. It's really creating a lot of opportunities for asset managers.
How much of this is being driven by pricing?
So pricing in the UK and price pressure on sort of solutions providers. So those would be model portfolio providers, unitized multi-asset solution providers, and asset managers, those managing sort of single strategy mandates, whether it be fixed income or equity, are seeing intense pressure. And part of that pressure goes back to an earlier comment. With there not being a lot of sort of new flows into the business, competition has really ramped up to win the flows that are there. So that's one factor. Two, as I said, we are moving towards more cost-conscious portfolios with sort of this active-passive blend. There is a market for alpha, but it has to be at the right price. So there's way more discernment around value when it comes to investment strategies. And again, it comes back to managers needing to deliver sort of consistent and clear outcomes.
One thing that when I was reading your research seemed to come up was this idea that partnerships are having a really big impact on reshaping distribution. What's driving that trend? How are asset managers responding to it?
One element I mentioned before, one of the factors really driving flows is the changing intermediary environment. So there's really two elements to it. One is the rise of consolidators. There is a movement to bring more sort of wealth management firms together, and we've seen these larger consolidated groups form. And in that, they have much more buying power. And again, I talked about how right now there are muted flows. That buying power is really giving them an opportunity to express their needs, but then they can also sort of bring enough assets that there's a willing audience to sort of meet those needs. And that's really where partnership comes in. It's sort of the two sides, a distributor or a solution provider and an asset manager coming together to build the right solution for the client. And that's sort of the second part about how the intermediary landscape's changed. We have more and more solution providers through model portfolios and unitized multi-asset who are essentially the step between the asset manager and the advisor. They're now the portfolio constructor. And again, they're looking to have sort of the right building blocks, the right tools. And this is what's opening up the avenues for the partnerships. Because again, flows are consolidating with a number of these sort of large solutions providers, which then creates more room to kind of have those one-to-one relationships with other asset managers, with other distribution groups. So again, across the chain, we've seen some consolidation, and this is leading to the partnership.
Well, pulling some of these threads together, what's your outlook for asset managers in the round? How are they going to navigate these challenges and issues in 2026?
Yeah, so I think there's a few elements. One is the importance of segmentation. So I have talked about there is this consolidation, but there really is a lot of unique sort of buyer types out there. So it's really important to understand each buyer and portfolio constructor individually and understand what their needs are. And then it comes back to that sort of blended portfolio I talked about. What is the value that sort of your funds, your investment style bring to that portfolio? And then as well, is your role to sort of manage the underlying funds in the portfolio or the portfolio itself? Because the other thing we've seen is a bit more disaggregation of sort of who's building the portfolio in the underlying funds. And this was really the growth and entrance of sort of the solutions providers. So again, there's many different types of portfolio constructors out there. And finally, the opportunity is we've moved on from active versus passive. I think for a long time now, we've been moving towards the blended portfolio, and that does essentially mean there's room for everyone. But given it's such a competitive environment, to be heard and to make sure you capture your place, you really need to be able to communicate your value very carefully, and again, understanding your buyer, understanding the portfolio constructor and what you can do for them. So I think there's a lot of opportunity because there's a lot of diversity in these blended portfolios, but it's about understanding your opportunity, where you deliver value, and then having clear communication around that.
Benjamin Reed-Hurwitz, thank you.